JB here. Hope everyone's doing outstanding. May 3rd, 2024. About 2:37 here on this Friday. Markets are rallying once again. S&P is up about 1.3%. Weaker than expected jobs report. Seemed like I wouldn't say the hope, but the Fed has been trying to induce uh, lower employment, well, higher unemployment, and we finally had a jobs report that missed expectations. So now you have the inflation expectations. The inflation is coming a little hotter than expected, but now you have data that points to maybe things are kind of cooling off. We had the weaker than expected GDP number, so kind of a mixed bag. So surprising, I wouldn't say surprising, but you hate to see the market rally on bad news, but pretty much it just puts more ammo in the Fed's hand to cut rates at some point this year, as opposed to not at all. So we'll see the SPY's up 1.3%. I was hoping for 512, 512.50. It got up to 512.50 at 10 o'clock. We reversed all the way back down to 508 and change. And now we're just meticulously melting higher, similar to yesterday when we had that big pull at 10 o'clock and then rallied into the close. You know what? I didn't update the 50-day moving average, so I'll have to get that up. But take a look at the VIX is down over 6%. Great tell for the market. And let me get into some individual names. So the first one I'll talk about here is Trupanion. So disappointing. When I say disappointed, it's not like the results to me were disappointing. It's how the stock is reacting. The stock, it actually went down to 18 bucks in the pre-market after hours yesterday. Reversed, was in the green at the open and is just sold off. Sitting here 2050 had Piper Sandler maintaining a neutral rating, downgrading, well, reducing their price target to 22 bucks. And they're citing deteriorating market trends. I look at the earnings, and Trupanion has two separate subscription sides. So they have their core business, which is what they've had since inception, right? Their Trupanion customers and members that they've had subscribed for their insurance. And then they've had partners that they backstop with their insurance platform, because as an insurer, right? Typically someone else is the one who's your backstop, right? You sell the insurance and then someone is the one who gets some of the premium and then covers claims and things like that. Trupanion is their own insurer, so they've partnered with other people, and there was actually a slight decline in the pet insurance subscribers, only from the third party side of it, whereas the core business still improved over 1 million for the first time ever, 1,006,000. But when you have a name that's divisive, highly shorted, people can make bear cases on it very easily. If all 1 million pets filed a claim this year, Trupanion is going to be a zero, right? I mean, they have $260 million in cash. That's a backstop as required by law. But I mean, I looked at the numbers. I look at the growth, continued trajectory to the upside, huge market. They're getting into the food side, so they're gonna be able to not only get once you have the information of the pet and its history and all that, now they can start tailoring food and stuff. So then the founder, he's going to work on that aspect. I don't know if what they don't give any details on what that addressable market will be. Sometimes it's not good that they get outside their core business, but I think that bodes well considering the data that they'll have. But anyway, in a nutshell, my calls are shot. I don't know if I'm going to try and trade this for upside. It's just frustrating because if people are short the stock and they've been short for years, they're just going to continue to hold because they think it's a zero. And I think the other way, but I'll probably just pass for now, and then at some point I'll revisit when I see an opportunity. But disappointing. But anyway, I have the slide up here. Amazon, back when it was about 2000, in 2005, it had an accumulated deficit of 2.2 billion. So let me see if I can post a slide in the chat room. I posted this chart one time. This is back in the day because people used to, probably in 2020, I posted, because someone posted about an accumulated deficit on one of these growth names. And I said, well, Amazon had a $2.2 billion accumulated deficit. So that meant from their inception, they have accumulated over $2.2 billion in losses since inception. They've lost that much money, right? That's crazy to think about. And that's what Amazon did. And then it's up, what is it up now? 10,000% since then. And obviously that accumulated deficit's not accumulated deficit anymore. It's substantial profits. But that's why you're a publicly traded company. Access to capital, growth scale, and eventually that accumulated deficit will become profits. If you look at Trupanion has a 236 million or so accumulated deficits since inception, which to me is not that bad considering how long they've been a public company and things like that. And their profits, their EPS came better than expected. Anyway, I could talk about all that stuff till I'm blue in the face about why I think trupanions should be trading in the 30s and if not higher. But all that matters is the stock price. And right now, it's trading at 20.57, and I can come up with all these ideas of why I think it's trading down here, and I put it on the watch list. People hitting the bid when the spread is $2, that just doesn't make sense to me. If you're a trader, why would you automatically lose money on that trade? Maybe you can get filled at 19 or 19.50, but you're going to sell right at the bid. The only reason you do that to me is to induce selling. If you're short and you have a huge position, and then you're taking small little pieces and trying to nitpick the bid to not only for the charts, for the algos, the bots, all that fun stuff. So rants for other days. So disappointing end to the week, but I don't sit here and pretend that I get every single trade right. This is one of those trades I'll learn from and move on. But take a look at the chart on Trupanion down here at 20 bucks. It's not even a 52-week lows yet. It was at 52-week lows when it hit 18 overnight, well, after hours. We'll see if we find some footing here. So that's Trupanion. Cardlytics, I went and added some May strikes because I was looking at the risk reward, and I think they're gonna have a nice beat and raise. The stock I put on the watch list. If it got over 15, I was gonna lock some of my Mays in. So I did that for over 100%, and then I went for 100%, and then I went and got the May strikes because I think that once it breaks 15, I think it's going to be 16, 17, 18 before it reports earnings on May 8th. So hopefully get the opportunity at 40 cents. Those, gets to 16, 17 bucks. Those might be hopefully a double, lock some of those in, and I'll try the rest. Again, I'm bullish the story. I think the risk for downside is very limited. I don't know what they could really do to stoke fears unless they raise concerns around their cash position or debt, which, I mean, they already shorted up with 2 offerings. So I think it heads much higher. You also have the backdrop of Clifford Sozen, Carvana, 6 million shares he has. Was that 700? I mean, Carvana's up another, was 5% before. I didn't even have it on my watch list here. It's up 4% here. So 6 million, was that $720 million in Carvana stock he has. He got those at an average of 50 bucks. All that does is improve his leverage to be able to add some other positions. He only has 5 holdings in his fund, and one of those is Cardlytics. So, and Cardlytics is a very small portion of it. And at one point, a couple of years ago, when Cardlytics was in the hundreds, it was like 40% of his portfolio. So you would think, and I'm not a brain surgeon here, but that he's comfortable holding that company at a large majority of his holdings, right? So for it to be at a very small position right now, I have to think he's going to be adding more. So anyway, that's my little rant on Cardlytics. I'll probably just hold what I have now. Hopefully holds 15, heads 16, 17 next week, early next week. BIDU, which is back over 113. The premiums, I thought they were going to be at least a double at the open. It opens, the spreads are wide. It was like 40 cents by 78 cents or 80 cents on the 120s. And then the premiums just kind of eroded on the call. So I didn't want to be a situation where we had a fade on BIDU. It's the China they're off for the holiday for the weekend. I didn't want to be in a spot where I lost money on BIDU again. So I went, closed my calls out for a small gain. At some point, I'll revisit. And surprisingly enough, it's up 113.22 here. And my calls would still be about the same price. So not worth the effort here. But at some point, maybe I'll revisit into earnings. And I think the earnings are at the end of May. Let's see if I can pull up earnings. May 16th. So not next week, the week after. I guess that's next Thursday. Wait, it was 10. Yeah, next Thursday, which normally Baidu's Monday or Tuesday. But may look for some calls there, but certainly not going to be too. I'll be very patient if I do add anything. So that's Baidu, Trupanion, Cardlytics, Adobe. So Adobe, I traded a couple months ago before their earnings, and big shock. Great space, great name in the AI space. NVIDIA mentioned them as well and partners with them in a lot of their software side of their stuff. And stock has been churning here right at the lows at 460, 470. Looked like it was going to break out a couple days ago. A little chop there, and then finally start looking. It's 485 here. I look at the chart. I'm like, this thing can go up to 509 or so in a flash. So I know JDS has been in it. I finally added some strikes, get some time with the May 17th. Once it breaks over the 500, I think 507, 508, if not higher,
The 50-day again is 509. I think it's a great story. So I think Barron's came out with a piece today. Let's see, this early this morning. Adobe has been left behind in the AI stock rally. How the company is fighting back. Anyway, I just think it's a great story off the lows. Well, it's off its highs, and now it looks like it's off the lows and ready to bounce. So got some calls there. I'll be quick to pull the trigger if it starts to reverse, but I think the trend is to the upside. I really like that one into next week. IIPR all the way up to 111.71 at the open and was churning there 110, 111. I almost looked to close the rest of my maze, but my conviction and my thought process on it hasn't really changed. I mean, it's only down a couple bucks. I think it heads to 120 in the coming weeks, so I'll continue to hold my May and June strikes. The Junes were over 100% at the open. I probably should have locked those in, but again, I think it's heading higher. So if I think it's heading higher, I've already locked in some profits on the May strikes, and I'll just continue to hold those. There's earnings next week. So you have Disney, you have Arista Networks, Upstart, Wynn, Twilio, Shopify, Uber, Affirm, Roblox. Um, Not sure I'll trade any of those. I love Roblox. Unfortunately, I was looking to play Square after earnings this week, and then that report came out. There was going to be an investigation into financial transactions. Square sold off on Wednesday. Yeah, Wednesday. Well, maybe it was Thursday, yesterday. And then they reported a beat and raise, and the stock was rocketing in the after hours, rocketing this morning, and has since reversed course $10. So similar, and not similar to Trupanion, but it seems like a divisive name. People think there's more meat to the story than meets the eye, I guess. So I'll probably stay away from Square right now. But I like you, and I still have the AI May 17 strikes. I'm I'll continue to look for opportunities to play AI for upside because I think that one certainly. I think it trades up near 27 or so in the coming weeks. I'm trying to think of some of the other names here that I've been watching. Just would love to see this the spy over 512 and chains. VKTX, I talked about this morning with Amgen. There was concerns that their drug being nixed, their oral drug was going to, I guess people sold VKTX off because they thought maybe it put a risk to all these other names that have studies out for their all weight loss drug. I don't know, but how crazy it is, all the way down to 71 in the morning. Opened at about 74 down to 73, and now it's back in the green, 77.21. I was looking at strikes and I could get June 140s, but then I'm thinking if they get positive Nash data, maybe it trades into the hundreds. And if there's a buyout, maybe it's 150, 160. So I don't even know if the risk reward is there for me to add any more strikes just yet. So still have the June hundreds locked some in already for some nice profits. I'll just hold those for now. Not going to add any more just yet, but just because the risk reward doesn't jive for me on the premiums. Because maybe it does, market could tumble and the premiums can come out of the calls. I don't want to be in a situation where I'm losing money on that trade. Turn sitting up here at 533. Like that as a play in the GLP-1 space. Nothing new there. I think that's it. Oh, Roku. So I still have those May 17 strikes. It looked like it was going to break out over 60 at the opens. Was it 61? I have to pull it back. 61.48, which was pretty much the high it hit on Wednesday. And then on the TTD, on the trade desk news with its partnership where they're going to share data in regards to advertising, things like that. And now it's back here doing the typical Roku thing, which is reverse the gap or reverse the early morning highs. At some point I'll revisit, but a tough one to trade for upside right now. But still optimistic. At some point, it's funny, a year or two ago, Roku had dropped from the 300s to 200s. Then it was in the 100s, and you had Citron Research and all these other folks saying, "Oh, Roku, Netflix is going to look at Roku." There was reports. I mean, if you don't know, Roku, the actual platform was created pretty much by Netflix. Anthony Wood was part of Netflix, and he left Netflix, and then created Roku and the Roku stick and all that fun stuff. And they had the same their offices and home offices are very close to each other. So there was a lot of talk, and you have to. It comes down here $59. The valuation, the competitive space, the a la carte system we have now with content, and Roku's the only content neutral platform out there. Have to think at some point there's going to be some more chatter around some M&A, but. All right, that's that. GameStop going, right? A lot of option action the last day or two on GameStop. Here it is up 15%. Let's see here. Um, yeah.
Don't get me. I love I love the GameStop story. I haven't looked at it in quite some time. Um, similar. I look when I was looking at Riley to play for a squeeze. You look at Riley and GameStop, totally different. Riley is not a GameStop. Riley's not. It's very hard to make a growth story around Riley. Riley's a heavily leveraged company with lots of instruments going on. Makes very hard to decipher. GameStop was a easy one to. Not easy. Obviously, if it was easy, everybody would be in it with a squeeze. There would never been that much short interest. So much scale, no debt, plenty of cash. Then you have the you know Cohen from Chewy fame coming on board. He had an insider insider stake that was back into September 20 whatever 2021. But interesting. At some point, maybe it's the same with AMC. And I remember I think I had like it was $2. I had some lotto calls, and then eventually the next week or the week after went up into $20. But then it's like AMC is a different story as well. AMC, the only reason it still exists is because of that whole entire run when the stock ran, and then the CEO who shouldn't be in his position just kept raising money on it, and then using the hype of cryptocurrency. So we're going to accept cryptocurrency at our at our movie theaters. And it's like, why would he's just playing into the hands of the pump? That just reeks of a CEO not looking for the business. He's just looking to appease folks to continue to buy the stock. And then, of course, he enriched himself. Oh, I'm not going to sell shares. I'll sell shares as, further down the line. And he sold shares, and they keep doing offerings. They tried to do the ape split and all. Anyway, rants for other days, but it's like AMC. I'm like, that's a name I can't get bullish. I'm not saying movie theaters aren't going to have a niche in for consumers. It's just not what it used to be, right? I think that's about it. Enough for my rants today, right? I hope everyone has a great weekend. I'm trying to think. Kava. I mean, I was so happy I got out of some of my all my calls, and then to see it again up, it hit 72.63 in the morning. To sit there and you're like, does this thing gonna overshoot one week? It's gonna go from 70 to 100. It's gonna do one of those. I used to call them the IPO smash up. But Kava's way far out from its IPO smash up. But I remember I think it was DocuSign. I'm trying to think of some of these other names that IPO'd, and then a couple. Shake Shack did it too. Shake Shack was like $30, and then within a matter of a couple weeks, all of a sudden it got caught fire and went from 30 to 70 to 100 to 150. And I call those the IPO smash ups. Kava's far from their IPO, so I don't know. It could be a CMG earnings smash up on the mini CMG, but tough one to trade. Happy I got what was $66 yesterday. So a man, Mana Doctor. I don't want to go into Mana Doctor. MNDR just reminds me of Elfin. So this company IPOs at $4. They're offering. It goes all the way up to 30 or whatever. And then, I posted on Twitter. You go to their website and there were typos on the website. I posted on Twitter, and then over the weekend, they fixed the typos. Like, what kind of company does that? Supposedly doing millions of dollars in revenues. Maybe they are. I don't know. I was hoping it's going to $50 and there would be options on it so I can get puts. But Wednesday it was $25, and then it kept getting halted, and went down to $8, and then bounced back to 20. And then today it's at $20. All of a sudden it halts 20 down to 10, down to 8. Now it's sitting here at $3.50. Who knows? There's like 75% of the outstanding share count is owned by insiders. I don't know if there's a lockup period. Are these the insiders selling? Like, how can the stock be under $4 unless people who've had shares before the IPO are selling, right? And I'd have to look more into it, but it doesn't make sense to waste my time looking into it if I don't have a vested interest. But it's just one of those names you look at and say, oh my gosh, please have options and go to the moon so I can get puts on, but guess I won't get that chance. All right, folks, let's have a great afternoon. Thanks for listening. I hope everyone has a great weekend. I'll try and get my week ahead webinar. Like I said, there's earnings. We got the Fed out of the way, and then now we're in the sell in May and go away kind of crowd with the markets, and we still have some uncertainty. So I just hope we find some support, find at least some chop here, and the market can start at least slowly but surely heading higher. Take some of the, I mean, the VIX is at 1374. So let's see. I didn't even pull up when the historical levels of the VIX.
back in April, we were under 13. Back at the end of March. So we still have room to go on the VIX. Back at the middle of January, under 13. So maybe that'd be the point where then I'd be worried. So maybe the VIX chop between 13 and 14, and we'll be all good. All right, folks, have a great day. Rock and roll.